Welcome to the Stage Analysis members weekend video. So I'm going to start tonight's video with a look through the major cryptocurrencies, as we haven't done a stage analysis on Bitcoin and Ethereum for a little while now. So I thought it'd be an interesting place to start this weekend for the part one of the video. Before I get into the regular members content, which is we'll be going through the major industry groups, the sector breadth charts that I did over the weekend. I posted them earlier on the stageanalysis.net website, as well as the IBD sector bell curve, the market breadth charts, the industry groups, relative strength tables, and the watchlist stocks as well that have come up over the last week. So I'll be going through some of those in a little bit more detail and what I'm looking for on both the long and short side on those. So quite a lot to get through today. It will all be split up into different chapters at the bottom of the video. So along the bottom bar here, you'll be able to see little, if you're watching it on the Vimeo video, you'll be able to see the little chapter segments, so you can skip to different bits if you're not interested in certain parts of it. Obviously, a big part of Stan Weinstein Stage Analysis method, which obviously I use, is the forest to the trees approach, where we look at the major industry trends first before looking down into the sectors, the industry groups, to see what's going on there, and then delving into the individual stocks of interest. So it's a top-down approach, but we also do a lot of bottom-up stuff as well, with obviously using stocks to actually find groups of interest as well, the opposite way around. So you can use a multilateral approach to that. But first up, I want to get into these couple of crypto coins and have a look at what's going on with a broader look at what's been going on with the altcoins as well, to finish off this first segment. So starting with Bitcoin here, this is a long-term chart of Bitcoin going all the way back to 2015. So it has a really good picture of what's gone on in Bitcoin throughout its stages over the last 6 or 7 years now. So it had a really strong initial stage 2 advance, over 6,000%. It moved in stage 2 through 2015 to the end of 2017, where it topped out with a blow off top parabolic move at the end of 2017. And as you can see, I've marked up the various pullbacks throughout this 2015 to 2017 run. So you can see how deep it kind of pulled back towards its 30-week moving average here. Whereas the last stage 2 advance, which obviously everybody is more familiar with more recently through the late 2020 period, it came out in July 2020 and started to move up, and it managed a 522% move there until it topped out. And we saw its change of behavior move here, where we started to break down and turn into a stage 3 range. So this was a 53% move here. So you can see the pullbacks within the stage 2 advance. We had 16, 31, 26%, and then we had this 53% pullback here. So this is what we call a change of behavior, and often a change of behavior will mark the transition into stage 3. So then had obviously a sideways range for the best part of the last year or so, and the current stage 4 decline that we're in now. So we broke down into stage 4 weeks ago, and it's now off 62%, which interestingly is exactly the move that it had during the COVID shakeout move. So it broke down into stage 4 briefly during the COVID lows, and then rallied back up again before it started to move back into stage 1 and started to look very interesting as it tightened up underneath that $10,000 level. So we zoom in on this a little bit now, come into the last few years. The normal stage analysis chart that I use with a weekly chart with stage analysis, I find 2 to 3 year chart is generally the best for looking at, because you can go through the stages multiple times within that time period. So you don't want to have too much on the chart initially. You can zoom out to a monthly chart to get a broader picture, and that gets rid of a lot of the noise. So, but if you have a weekly chart with more than 3 years, it can start to get a little bit messy with too much going on. So, and you start to consider levels that are less relevant. So looking at this one, you can see the stage 3 range that's been developing for the best part of the last year or so. The breakdown into stage 4 here, which actually five weeks ago there, I said 4, and we've been consolidating down at the lower end of the range here. Previous support turned that has obviously held it up around the $30,000 level. So it's attempted to bounce in the last week or so, but it had a failed intraday stage 2 breakout. So we drop down onto the daily time frame here again. You can see this coloured level is the same level as on the weekly chart here. So this is this range around the $30,000 level. So we go back. You can see we formed a brief little flag type pattern here with an attempt to break back out above the 21-day moving average, which it held above for 2 days before rejecting it and coming back down towards the support again. So this trend line here has now got 3 touch points. So we've got a short-term valid trend line now. Generally, you want to have 3 touch points for a trend line to be valid. And then, so if this starts to break below this, we could potentially move off into a stage 4 continuation. So if we look at this on an intraday chart, this is the 4-hour time frame. You can see that base structure in more detail. So again, if we go back to here, this area in here is this area here. So you can see that in much more detail now. And so applying the Wyckoff method to it as well, you can see we had a selling climax down in this area here for automatic rally, secondary tests, and then starting to move out into this intraday stage 1 base structure, which formed in the upper part of the base here. So we've got the entire area here is the stage 1 base, but the majority of the price action actually is formed in the upper half of this base. So you can see that's, if you break it into 2 segments here, you see barely any of the price action has touched the lower end of the range. So at the moment, showing a bit of relative strength in the near term. But if it does start to break back below some near-term levels in here, if we start to break back below this kind of area in here and we start to see some stronger volume coming in, then potentially we could move off to the downside and potentially move off into a stage 4 continuation breakdown. So be on the lookout for that. You can see the stage 2 intraday stage 2 attempt that it had here. So it attempted to break out with a sign of strength bar here, but it couldn't make any progress. It had a little bit of a double top here as it attempted to continue and reversed immediately. So coming back down and then breaking through some near-term levels again. So this turned into what we call a UTAD, so an up thrust after distribution pattern, and then has broken back down. We've got some lower highs developing in here, so our last point of supply potentially, and then at the moment it hasn't managed to break back through these near-term levels, still holding underneath prior highs from back on the 23rd, 24th period there. So again, if this can't break back above and starts to break back down potentially into the lower end here, we could make a stage 4 continuation breakdown. But on the flip side, if we start to see some near-term strength in this, it can start to break some levels again. We can get back up out of the range. It can potentially make a further stage 2 breakout attempt. We could obviously start to move back off to the upside again. So at the moment, this continues to chop and change in the range within stage 1. We haven't got any definitive direction as yet. Ethereum making a very similar pattern. So this is the weekly chart for Ethereum. So very similar to what we saw in the Bitcoin chart. It had a much stronger move in terms of the stage 2 advance from July through to April 2021 there, over almost 1,400% move compared to the 500+% move that we had in Bitcoin. So it's a leverage play to Bitcoin in a lot of ways. I think the original stage 2 advance in this was much stronger than what Bitcoin had as well. I think it had a 50 times move compared to Bitcoin's move, which obviously was very, very strong at 6,000%, but nothing as strong as what Ethereum saw. So again, smaller player, but the secondary coin of the crypto coins, and again broken down into stage 4 around 4 weeks ago here, and potentially going to make a continuation breakdown if it can't reverse at this here point, as it's potentially trying to attempt a spring but hasn't managed to show any kind of relative strength as yet. You can see the relative strength versus the S&P 500, which we use as a universal tool to measure relative strength. So you measure crypto coins, gold stocks, any kind of asset, commodities, and if you use the S&P 500 as a sort of universal relative strength measure, then you can see how that asset class is performing versus everything else. So at the moment, this is underperforming because it's below what we call the zero line. So this is the Mansfield relative strength indicator at the bottom here. So it's the Ethereum versus the S&P 500 and whatever you want to use for it. So whatever stock, whatever symbol you want versus the S&P 500, and then we put a 52-week moving average against that, and that's what we call the zero line. So this is this line here. This is what we call the zero line. As this on the original Mansfield chart was a flat line, and then it would measure the indicator going above and below it. But I always find it's more useful to actually use this with the moving average, as you can see the slope of the moving average as well. So at the moment, you can see the moving average is starting to turn a little bit lower here. So, and we're a long way below the moving average at the moment. So Ethereum's significantly underperforming stocks at the moment. So we need for this to start to recover back above its zero line and start to move back above, and that to turn back up again, potentially start doing this kind of behavior. Potentially that could be a good point for Ethereum again. But at the moment, underperforming, so not a great look. If we look at this on the daily chart, you can see the major sign of weakness here. I marked up some of the Wyckoff markup on this one on the daily chart. So you've got selling climax, automatic rally, secondary test. Then again, attempted to make an early breakout, which turned into an up thrust and a test, and then broke down lower highs on the way down, started to move below its 21-day moving average here. And then we had this flush move, and it made a break back down into stage 4 again once more. So forming this lower base structure, a lot we can see in Bitcoin as well, but some relative weakness in here as it continues to make lower highs within the structure. You can see the 21-day moving average is trending down lower strongly. If we drop down to the 4-hour time frame on this again, so if we go back one, so this area in here, this base structure is this base structure here that we've marked up. So again, compared to the Bitcoin structure, this is actually much weaker if we look at the two compared to each other. So we'll go back the charts here. You can see, as I said on this one, the Bitcoin low, we formed the base structure. The majority of the price action is actually forming in the upper half of the structure. Whereas if we go back to Ethereum here, you can see since it was initially moving in line with Bitcoin, the structure was forming in the upper half, but you can see the vast majority of the price action for the last couple of weeks is actually forming in the lower half of the structure again now. So actually showing some relative weakness versus what we're seeing in Bitcoin. Potentially we could look for trend line break in this one if it does start to move back to the upside again. So we'd need to see this start to move back through the 1950 area, 2000, before moving back out of the base and potentially moving up and out again. That's obviously best case scenario. The weakness that it's shown at the moment, if it can't muster a move back above near-term levels and we start to see a break to the downside, we could potentially make a stage 4 continuation breakdown on this one. Right, let's have a look at the altcoins to finish off this section. So this is the stock charts has quite a few of the altcoins. There's like 149, 150. So you can make a candle glance chart of those and look at them all in one chart list, which I find really useful. You can see the price action on this. These are a 2-month daily chart here. So you can see vast majority are moving very similarly to what we see in Bitcoin and Ethereum, making little base structures since breaking down. But the vast majority, as you can see, have not managed to break above these base structures. They're all looking very similar in fashion. So at the moment, potentially flagging, and also as you can see, this is the blue line is a 50-day moving average and the red line is the 200-day moving average. So all of them are basically below their medium and long-term moving averages, as well as the majority of them being below the short term. The dotted line is the 21-day exponential moving average. So the vast majority are still below their short, medium, and long-term moving averages. It's very, very few stocks actually that are not in stage 4, not stocks, crypto coins that are not in stage 4. As you can see here, they're all very, very similar in pattern. So until we see some kind of resolution in Bitcoin and Ethereum and some strength there, the vast majority of these are going to do very similar moves, as they tend to act as leverage plays to what's going on in the major coins. So that is that.